Hi and welcome to the Market Alert for Tuesday, the 10th of May 2022. So bloodbath is the headline, from greed to fear to I don't effing care anymore is the headline from Zero Hedge, and this is echoed by Goldman as well. The setup for an equity market crash is as high as I've seen it. This is the top of the book depth of the S&P divided by the 1 month ATM vol. It is flashing red. The setup for an equity market crash is as high as I've ever seen it. That means they're going to be short then. Drawdown mania. The pain is huge. There's a lot of drawdowns on equities. Even Sky News are in on this one, with Bitcoin and US tech stocks hammered as global flight from risk intensifies. That's the key there. Risk intensifies. Bloodbath again. Yuan tumble as 10-year yields soar on global stagflation fears. Markets uncertain, but certainly more pain to come. And then we get into inflation again. Spring wheat, its 14-year high on world markets. Weather woes. Not had any rain in the UK for weeks either. US gas prices soar as Europe and Asia scramble for LNG. And then Michael Saunders of the Bank of England yesterday, he came out and he said that cost of living, Bank of England rate set to see inflation higher than forecast. We're already at 7%. Well, that's actually more like 20%. Food prices up 37% year on year. But they want to see this higher, and the bank rate is 1%. So Michael Saunders is warned in his speech that the threat posed by so-called secondary inflation ahead should be tackled more aggressively by his colleagues on the bank's Monetary Policy Committee. What they're hoping for is that there won't be any more inflation. We've sort of peaked, and we've got the CPI numbers out tomorrow from the US, which I would suggest that they're going to be slightly lower, because obviously the ramp up with the war and everything else, you're not going to get a one direction. You always get a bit of a pullback. That will ease things a bit for the central bank's policies. But ultimately, I would agree with Saunders, there is going to be a secondary inflation wave. There's no doubts about that, because we're going to end up with food shortages going forward anyway. So it's going to be interesting as from tomorrow with those CPI numbers, which the US are going to be coming out with. Let's just have a quick look. We've got new news today of any significance. We've got a couple of FOMC members speaking tomorrow. We've got the criminal, but these are the numbers that people will be looking for. The month on month, it's a drop of 1% and 0.9 on the core CPI. So let's see what happens tomorrow with these numbers. But that's what the market's going to be waiting for, because they're going to be hoping that the Fed will say, actually, it is actually transitory, and we can go back to where we were. But we know that's all a pack of lies, but they need to take some pressure off the market, because yesterday the markets sold off rather sharpish at the end of the session in the Dow, which you can see here, trading down to that 32,230 level, and also gapping down overnight as well, which we'll look at in a moment. So yeah, yesterday we're way oversold. We need a bit of a bounce. We've started the bounce today, very significant area. Despite all of the bad news I've just read out to you, don't be surprised if the market puts in a reversal back to yesterday's high, because that's how it works. You put out all the bad news, traders go short at the open, and the market goes up all day. So be aware of that potential. And if you look at the 30-minute Dow, you can see overnight the market tanked down. Wasn't really any selling. The momentum switching there, and prices have come back significantly here. In fact, let's just have a look, see how much they've come back so far. Up 360 points in this range already. So you can see what they're actually doing at the moment. They're trying to get the markets back up as a straight reversal in the daily chart. I'm not saying that it will, but I wouldn't be surprised, because that is not unusual. There's a perfect example of it there. Another one there. Down that day, up this day. It's down, up. It's not unusual to see this pattern. So just be aware of that. If you're trying to get short, they could keep the market moving to the upside, which they're doing at the moment. I mean, there's always the chance, of course, that the market will only retrace 89% and then head back down to the DP. But like I say, you've got to think as a trader what the prospect is for both sides of the market and what to expect or what to see in order to take advantage of this. In the German DAX, we're seeing this also doing exactly the same, coming off the 62% retracement from here back to here. And again, overnight, the market's dropping down, gapping down to the S1, and the market has already filled the gap as it did during yesterday's session. We'll look at that in just a moment. So you can see already we're just back to 89% from here down to here, projected back. That takes you to the 50 bar MA and also the DP. You could see a bit of a sell-off in the futures and the initial cash market to find support and then bring the market back as well. That's another alternative scenario as well. Yesterday there was the gap on the overnight for Monday. This was taken out when the cash market opened. The gaps generally are filled, just as this one is filled as well. Once filled, the market then can reverse and move lower. And I should look at the weekly chart as well, 62% there, and we looked at that 200 MA there as well in the weekly chart. Interesting to see how the volume has increased significantly in the weekly chart of the DAX as well for the last 2 weeks, market being sideways. And in the 5-minute chart yesterday, we saw the market moving higher. I sent a note out first thing saying expect the market to move higher initially. It did in the futures. Then we got the retracement. The momentum was dropping off. And then we switched to red and the market down. We got a bit of a bounce after being oversold. Divergence crossover. Parabolic moving up to 200 MA. Overbought with divergence. And then down, oversold, a bit of a bounce there of 25 points, stuck at that 50 EMA. We then switched back to red, back down, oversold, and we've got a test down here, retracement, momentum switching, market trades back up 80 points. We then get an overbought situation, market comes back at 89% retracement and then moves back to the upside. Now, I'm just going to switch back to the Dow because I want to show you this action here. This is when the Dow opened in the German DAX. And I forgot about this till I've just seen that. It's just reminded me. So let's have a look at the Dow and go into the 1-minute chart. I've never seen anything like this yesterday. It's as if the market was having a heart attack. It opened fine and we got quite a bit of volatility. Then all of a sudden we started getting price bars of 70 and 80 points and all in a row here as well. And what's happening here is that they've got massive sell orders on the books, and as the market comes down they offload some. It's called the distribution phase. The market comes down, then they buy the market back, then they can offload some more shares, then they buy it back because they've got prices, limit prices to actually sell. Eventually the market breaks, they find support, and then they're able to bring the market back. And here you've got a situation where the markets are putting that higher than the previous high, but the momentum dropped off there. And then you can see again, each time they're trying to bring the market back to offload. And then eventually the market breaks and then moves down. And if you look at the 30-minute chart, you see the sell-off there before the close. So let's have a look at the currencies. GBP, JPY, really quiet compared to what was happening in the stock market yesterday, and the same in the 30-minute chart. We've just got 150 points range there, which is not bad at all. With the move to the upside, oversold, got the divergence, crossover, supply, etc. All of the indicators there. Market then bounced back when the Dow opened, and then it's been in a sideways range since. The pound is finding a bit of support after Saunders' comments. Demand there sideways to higher for the pound as well, and you'll see this yesterday moving back up 100 points after being oversold, with the momentum switching to the upside from the low of Friday. Retracement there, back 89%, and then back to the upside. Meanwhile, in the metals, well, surprise, let's look at the 30-minute chart yesterday. The sold the market off very early, as I said they would in the market alert, found support, brought the market back at lunchtime, and then it drifted all the way back. Quite a volatile session for the silver market. Overnight, though, the market's been brought back 89%. You've got divergence, not quite divergence, I should say, because they haven't made new lows here, but certainly an 89% retracement there, and the market moving back. Will this hold? Well, we've got to look at the bigger time frame, haven't we? Look at the daily, 21.97, but in the monthly chart, we've got that 21.68, 21.11 area, which I think is still going to be retested myself. In the gold market, this also reversing overnight, having sat down at the 89% retracement area there as well. Needs to start moving to the upside, but needs help from the dollar. A lot of supply there yesterday in the dollar. Is it absorption to move higher, or is that 103 that we see in the monthly chart holding there at the moment? We've got that resistance across here on the left, and that's where the market's stuck at the moment. Can it break it, or can it not and move lower? So we've got a new high in this here. If I can get it to just draw this in, let me just move these for a second, and then we can have a look. There you go. 104.165 is this high for the dollar. Meanwhile, crude was monkey hammered down yesterday, and you can see prices finding support at the 62% retracement and the 50 EMA at the moment. Stuck in a sideways move, but natural gas prices moving sharply higher once more during yesterday's session. So there you go. There's a quick roundup of everything that's going on. Like I say, watch the futures market when this kicks off, and also the cash market. You may see a bit of a move to the upside and eventually runs out of steam, and the selling could resume. So we'll wait and see. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.